attention to them, but it is a $24 billion public company. And the information had some news yesterday about its relationship with Walmart that sent shares down in trading. Joining me now to discuss that is Kathy Perloff and Theo Waite, two reporters at The Information who wrote that story. And we also want to bring on Shweta Kajuria, who follows the company at Wolf Research. It is great to have you all here. Kathy, I want to start with you. Look, most people probably have never heard of the Trade Desk. And so talk to us about why the company is important and why we should actually care about it.
Yeah, the Trade Desk, maybe not a household name, but really well known in the ad world. It is one of advertisers' favorite place to buy ads across the internet. So the company automates the buying of ads that run on websites, on mobile apps, and particularly on streaming television. They're really easy to use, intuitive platform that has sort of become popular as a challenger to both Google and Amazon, which are also in this business. Because of their popularity, they've been able to kind of carve out relationships with premier media partners, including Walmart, which we can get more to. But they've used their sort of good technology to sort of leverage it into having partnerships with media that advertisers want to be on.
Got it. So you've got a company, a beverage company, let's say, they want to buy ads on the internet. They use Trade Desk to help them find the different places where they can buy ads, what the right places to place those ads. What did you find about the company's relationship with Walmart?
So the Trade Desk and Walmart have had this exclusive partnership since 2021. And that means that if advertisers want to use Walmart's shopper data to inform their ad buys across the internet. So if they want to target, Walmart shoppers who are in the market for shampoo on, bustle.com or on Hulu, they can use the Trade Desk, and the Trade Desk is the only place they can do it. But what we found out is that the exclusivity of that relationship was Walmart renegotiated the deal so it would no longer be exclusive last year. So that means that Walmart can work with other ad tech companies to facilitate this buying. Also, we've heard that Walmart might want to buy a company. Maybe they'd build, their own company. And one of the reasons that precipitated this change was Walmart was somewhat unhappy with the high fees that the Trade Desk charges.
Right.
To be clear, they still work together. The companies have said they're still committed to the partnership, but, there's some sort of friction there.
Right. So, Shweta, I want to get to you to talk a little bit more about how the market responded to this. But Kathy, just a few really simple questions here just to make sure, because I'm sure people are wondering this. So here we're talking about Walmart as an ad buyer here that is using Trade Desk to buy the ads?
No, we're talking about good question because it is very confusing. But
Okay.
is Walmart as an ad seller? So
Okay.
Walmart has a business where, because so many people are familiar with the Walmart brand and they have such a big audience, they can sort of sell that audience to advertisers who want to target it either on Walmart's website or across the internet. And so Walmart is sort of selling. It's weird, but in the advertising ecosystem, if you have people to look at ads, you're a media company, which is not really how, colloquially.
So Walmart is selling ads, and Walmart had a relationship with Trade Desk that represented the buyers basically coming in, and that relationship is no longer exclusive. So now Walmart can work with other companies that represent the buyers. And so that is obviously a hit to Trade Desk's business. Shweta, I want to come to you. What was your reaction when you read the story?
Reaction to the stock move or to the story?
The story and the stock move shortly after that.
No, I think Kathy did a great job. I think that in terms of explaining the relationship between the Trade Desk and Walmart and what it really could mean for other players in the market. In terms of the stock reaction, however, I think that maybe it was a little bit more exaggerated.
Okay.
Here's the reason why. First of all, it is a negative for the Trade Desk to lose exclusivity. That just brings in more competition. However, the way the stock reacted implied as if that the Trade Desk was going to lose Walmart partnership altogether imminently. That may not happen. First of all, Walmart is not as meaningful of a revenue contributor to the trade desk. We think it's a very modest impact, even if all of Walmart is still there. It's a very modest impact for the 2026 estimates.
Right.
Second is that it's probably going to be a slower bleed instead of all of Walmart just transitioning right away. Perhaps they will start increasing competition between Yahoo or Criteo, and I know Kathy mentioned a couple of those. So
Right.
anyway, that's my immediate reaction.
But I do want to take a bit of a step back here. I mean, just last week, we saw an even bigger price movement for shares of Trade Desk. They dropped something like 35-40% almost in a single day. Talk about what that was about, and could this have really just been more fear?
Exactly. That was where I was going next. So you basically read my mind. The stock reaction post the print was the lack. It was a reflection of perhaps investors' way of saying that there are two issues here. The management team's credibility is now being questioned after so many years of consistently producing results, and now this being the second quarter out of 3 quarters where perhaps the results were not as expected. And that's very unusual for a company that has been outperforming consistently for several years since their IPO. That's point one. And the second is that it was also a reflection that even if we don't know really what is the issue with that the trade desk may be facing, whether it is weakness in brand spend or competitive dynamics, the reality is there is some issue, and that creates a structural headwind and puts a cap to the multiple for the stock.
Theo, how does Amazon fit into this ad tech world?
Amazon has their own DSP that competes with the Trade Desk and with the other companies we've talked about. And they've been trying to steal a lot of business from the Trade Desk, as we've written over the past few months. I wouldn't expect Walmart to ever use Amazon because they have obviously a massive rivalry, and Walmart goes to great lengths to make sure, it never touches any part of AWS, for example. But, that being said, they are putting pricing pressure on the whole industry. And, I think there are a lot of people at the Trade Desk that wish they could offer pricing like Amazon is right now.
Well, and I want to unpack that a little bit. And, again, just to translate, so Amazon has an ad tech product that competes with the ad tech product that the Trade Desk has that helps buyers buy ads on the internet. One of the things you just mentioned was pricing pressure. Talk a little bit about what Amazon has been doing with its own ad tech product to compete with Trade Desk.
So Amazon has this huge ad business, the vast majority of which is still its e-commerce site, right? You pay to boost the visibility of your items when people search on Amazon.com, and that's still the vast majority of their business. But they've been expanding into Prime Video. They've launched, and put more emphasis on this DSP that does compete with the Trade Desk. But, ultimately it is a tiny side quest for a very profitable company. And if, people in Amazon's S team decide we want to grow our DSP, we want to, basically shut down the Trade Desk or, compete with them, more strongly than we have been, like, that's really not a big deal for them to do because they just have so many resources. And, they're probably not going to be able to poach Walmart, like I said, but they're, definitely putting pressure on them.
Right. Very quickly before we go, Kathy and Shweta, I want to ask both of you, we have these two Google antitrust rulings. One was to do with Google's ad tech business. Is that an opportunity for the Trade Desk right now, Kathy?
Yeah, it's a huge opportunity. I think that Google, has been the dominant company in advertising technology, which is why the Department of Justice brought a case against them. But since they've been under scrutiny in a lot of the key ways the digital advertising market is growing, like streaming television and e-commerce advertising, they've not been as aggressive, and that's allowed companies like the Trade Desk to kind of get a footing in the market.
Right.
And if the Department of Justice wants to break this business off of Google, and that could help the Trade Desk even more and Amazon even more. On the other hand, because it's been part of because this unit has been part of Google, some might say that that's been like halting its ability to innovate. And maybe if it was a standalone company, with the kind of resources it has, they could be a stronger competitor than they've been in the past couple of years. So, yeah.
Shweta, is this opportunity for Trade Desk, is that priced into the stock right now, or can we expect more movement there?
No, I don't think it is priced in, and I don't think that investors may be expecting a meaningful impact from the ruling post the AdTech case. My view also is that it may impact some of the supply side platforms like a Magnite or a PubMatic, perhaps meaningfully more than it may on the demand side, which is where Trade Desk fits. But don't get me wrong, I do agree with Kathy. It should be a positive for the Trade Desk.
Great. Well, thank you to the three of you for coming on. It is a very an interesting world that has a lot of terms and complicated concepts and value chains attached to it. So we appreciate the three of you coming on to discuss all that. That is Kathy and Theo from The Information and Shweta from Wolf Research. Okay. xAI is one of the closest watch AI companies right now, and talent is one of the closest watch priorities for every company in this space. And this morning, Theo, who was just on the show, is coming back. He gave us an inside look about exactly where xAI's talent is coming from. And I want to bring Theo back to talk about that story. Theo, good to see you again.
Good to see you.
So, look, it feels like talent at xAI, we know less about that compared to other companies like OpenAI and Google. We hear a lot about the people that those companies are going after. What do we actually know about who worked at xAI?
So xAI, was it's less than 3 years old. It was formed, with Elon making these, grand statements about OpenAI and Google, being evil and needing a competitor that was different and controlled by him. They hired a bunch of, high-profile researchers initially, and then, it's been a little quiet, and we've seen all these headlines recently, like you said, about, Meta throwing hundreds of millions of dollars at people. So we decided to do a story that was basically just, okay, who actually works at xAI now? And what we found is, there are quite a few people from Google that's the biggest source of talent. There are about 19 that have joined this year at least, and 40 since the creation of xAI. There are also a lot from Meta, a lot from ByteDance and Microsoft. And it kind of just underscores the extent to which there are basically a handful of important companies in this space, and talent is kind of always circulating between them.
And what is it like to work at xAI? I mean, is this comparable to the other AI companies?
I think Elon has this reputation as someone who, drives his people really hard. And that's definitely the case at xAI, especially because it's been where he's kind of focusing his attention largely in the past, couple of years, outside of politics, that is. And, we understand that there are some pretty, incredible demands that are made on people there. I understand that, some teams can work 7-day weeks pretty frequently. And, that can be demoralizing for some people, but others are, very invested in the mission. And, if it's 2025 and you sign up to work for an Elon Musk company, you do kind of know what you're getting into.
And one of the my perception, at least, of xAI is that it's actually a much smaller company, I think, from what I understand, than some of the other companies, and yet their models are pretty good, right?
Yeah, and a lot of that comes from the tremendous amount of resources that xAI has poured into building their initial data center, Colossus, and Colossus 2, which is about to go online later this month, potentially. And just having this incredible amount of fundraising and money that you can throw at compute does go a long way.
Now, one of the most interesting details about your story was this idea that Elon likes to talk about people. You're talking about the research here, and he basically, the company likes to call the technical talent just members of the technical staff. Is this common in the industry, or is this something that is unique to xAI?
I think it's a phrase that does exist in other places, but I think is more emphasized at xAI. Musk has kind of attacked the title of researcher as this, extravagant academic idea. And, if you're really trying to build serious products that people will use on tight deadlines, you're an engineer, you're not a researcher. Researchers, just sit in their offices and think extravagant thoughts or whatever.
Right. And last question for you, Theo. We've heard about these big pay packages that are put out in front of researchers to try to get them to come. Have you heard anything like any grand sort of gestures in terms of pay packages that XAI has made at all, or to attract researchers or anything like that?
I mean, the people that are there are definitely, making decent money. I haven't heard anything on the scale of what Meta has been, offering people. But, what I would say also is that it's kind of notable that there really haven't been that many like super high profile hires by XAI. It's more been like, assembling this large group of people that, were not like superstars at Google or Microsoft, but very smart and, kind of are attracted to the hardcore culture and have been able to catch up with those companies despite being less famous largely.
Right. Well, great, Theo. I know there's a lot left to uncover, and so we look forward to having you back on the show. That is Theo Waite, who covers all things Elon Musk related at The Information. Okay, I have been dying to cover robotics on the show, and I am so excited to bring on our next guest. Jake Lucerarian is the co-founder of Gecko Robotics. He has been building in this space for 12 years now. His robots are used across several different sectors, including oil and gas, defense, pulp and paper, and mining. And I want to bring him on to talk about where this sector is headed. Jake, welcome to TITV. It's great to have you.
Yeah, great to be here. Thanks so much.
So, look, I've seen the videos of the robots, crawling on Navy ships and, these little mini drones flying around. I mean, explain to us what your robots actually do.
Great. Well, yeah, a little bit about the company. What the robots do is they inform operational data platforms that we sell to those different sectors and industries. And so what they're doing is they're going out and gathering all this information and data about the health and also the performance of all those assets that we're clouding all over. So the robots specifically that you probably see are gathering corrosion, erosion, cracking data on these physical structures, so steel, concrete, composites, and trying to assess like where all the damages are, what's going to fail, and then also how, with that information, how do you help this system actually work way better with this new information and data set to power our AI models to be the best in the world.
And so the way that I understand is you have physical infrastructure like a bridge, right? And the government or whoever is operating the bridge will hire Gecko and its robots to come. Robot will sort of crawl on the bridge, and then the robot sort of sends the data back to the software called Cantilever, and then the software says, "Hey, the bridge has fault lines here, here, and here. You got to fix it right now."
Yeah, that's exactly right. And just like to put this in perspective for folks, I mean, we got our start in the energy sector. I started the company out of a college dorm room back in 2013, bootstrapped it, and then was in YC for the 2016 batch after turning down an acquisition offer. Truly $100 to the name kind of story.
Right.
And what I learned was that one, most technology companies do not like step foot into these sectors and industries. They don't understand the problems at their core, and they don't understand that there's data sets that just simply have never existed before that you need to be able to help these sectors be able to digitize and be able to enter a world where where software and AI can truly be impactful in unlocking these kinds of big game-changing solutions and decisions. But you're right. You're gathering information data with the robots. They're feeding it into the software so that the software can help to supercharge the kinds of decisions that wouldn't have otherwise been impossible to make. And it's not just on the health, but it's also looking from a system-to-system standpoint.
Right.
How do you actually make the system perform better? So, it's a combination of a bunch of different hardware solutions like that are gathering data that never existed before.
So I want to talk broadly about robotics, but I have a couple of rapid fire questions here about the business. It's a very fascinating business, and I just want to make sure I understand it. So first of all, you're working with mining companies, oil and gas companies, all these industrial equipment companies. Is each company getting their own bespoke robot, or how many different types of robots do you have?
Great question. So we have a core architecture on the hardware side, and that allows for us to be able to adjust and augment the robots to be able to meet whatever the conditions are. We have some robots that can go underwater. We have some robots that can climb up walls or go in pipes. We have some ones that are we just use a common architecture as well to make fixed sensors.
Okay.
And so you want like a modular platform. But to answer your question, we actually don't believe in this concept of building robots and selling them to these different companies. We believe in a model where you build the technology stack, and the advantage to build unfair software and operational platforms comes from that data set. Why would I give that away? And why would I believe that a software company would be able to understand the complexities of the data sets and the new kinds of sensors or robots and payloads that need to be built at these facilities that you just don't have any other way of identifying and understanding? And so,
So you're not actually selling the robots to the companies. You sell them like, 1 to 2 year contract or something like that with the software, and you say, we'll give you the robot to use for that time.
yeah, that's right. We compete on a software to software competition. So what we're looking at is we'll come in with to one of those companies that you're referring to. They'll buy software licenses. They'll buy cantilever credits, which is a combination of different kinds of sensors and robots on total amounts of equipment that we're looking at, and all of that is able to fuel the ability to make sorts of decisions around how to extend the useful life of the infrastructure that was supposed to only last a year or two longer, or how to get better heat rates at power plants to make them, make more kilowatts for less BTUs.
Right.
There's just like there's so much that you can actually unlock that was never possible before because of these extra information and data layers that never existed. And I'm here, but one of the things I'm here to say too is like, look, we're talking about the who's going to win the AI race and energy so associated with that. What's very clear to me, and what people are going to start to talk about way more is, those that can win the robotics race and the data race are going to be the ones that are going to be
Right.
most advantaged in that pursuit, and also that can help unlock more energy creation for less investment, less assets. We're seeing that with our customers now, whether it's on the energy side, but also same kind of concepts in mining and on the Navy side too, internationally and in the U.S.
Right, right. A couple more quick questions for you. So, I mean, you make these robots. This is kind of like a neat business model. This is like robots as a service, kind of the way I'm thinking about it. I mean, how much does it cost to make one of these robots?
Yeah, the cost could be like millions of dollars. It doesn't
Okay.
really matter the cost, I guess. Like we're not trying to optimize for the BOM. We're trying to optimize for the impact of the information we're collecting. And the difference between the robots as a service and what we kind of do is like it's kind of unfair, right? Like, and that's kind of the whole thing. Like I want to, the software we're building is like no one else can actually deliver that because
Okay.
we're the only ones that have all the robotic stack and the technology that supports us offering a solution that no one else can bring to bear.
So you actually don't think of it as robotics as a
We sell
you don't
software
think of it as
solutions.
like that.
We sell software solutions. So,
Okay.
we just happen to use tools that other people don't have.
Got it. Got it. Well, I mean, I think that's interesting because we say robotics companies, and we think about the robots, and I guess what you're saying is, yeah, we built the robot, but the robot can't do a whole lot unless you have a
Yeah.
software platform that actually can make
The
sense
reason
of
yeah,
all the data.
and gosh, the reason I like to keep the name robotics in the name of the company is simply because like
It's fun.
the
It's
position is
fun.
great, right? It's like like we come in very differentiated because we can offer a software. And also I want to redefine too, like while people think about robotics in general, I always whenever I, you speak on these panels, like I'm always talking about how look, I would love to buy as many humanoid robots as Elon can build. And I'm going to work in these power plants that I run and operate with the software. And if they can do great, incredible things and get different information and data sets that I couldn't have gotten before and make jobs safer and help to enable humans to make smarter decisions and make these truly help the US win a race on energy or manufacturing or whatever it is,
Right.
I want to put these robots to work. So I'll build a bunch of robots, but I'm also not going to reject Optus when it becomes a tool that's reliable.
Do you think you're going to get into humanoid robots and building that at all?
If folks aren't delivering products that are good enough for me to use, then I definitely will, and maybe I am now.
As in, maybe you are working on humanoid robots as we speak. Is that
Mobile
what you're saying?
robots are, they're an important part of the future for sure.
Okay. Well, I'm going to take that as a Gecko Robotics is looking seriously at humanoid robots, unless you tell me otherwise. That's very
Sounds good.
that's very exciting. Jake, thank you for coming on the show. I really appreciate it. And next time you come on, we'll have to get a demo of one of these
Yeah.
robots, and I'm sure you guys have lots of new features coming out. So please come back on the show and show us very soon. Again, that is Jake Lucerarian from Gecko Robotics. Okay, for our final guest today, inference has been a term that you have probably heard about loads about in AI, and you might also have heard of this term inference provider. Admittedly, this is a type of startup that I have had a little bit of trouble understanding myself, even though the information has broken a ton of news on them. And so today, we're going to get to the bottom of what an inference provider really is. Joining me now is Lynn Cow, the CEO of Fireworks AI. They are one of these inference providers. Lynn, welcome to TITV. It's great to have you.
Hey, thanks for having me.
So let's talk inference here. I mean, what is the difference between an inference provider and then a cloud provider like AWS and Azure? It feels like they're the same thing to me.
There's many layers of model serving, all the way from fundamental infrastructure from data center, power, and the stack and racks of deploying compute, the GPUs, the CPUs, the storage, and so on interconnect. Install that in the data center and light it up. And then there's a lower level software stack to power those. And then there's a higher level, cloud level infrastructure like Kubernetes to power those. And then we build on top of that to do three-dimensional optimization specifically. That's our unique value proposition, as we are a Gen AI cloud platform that is deliver customized quality, speed, and cost to all application developers.
Right. So stick with me here. You know, the way that I think about Fireworks, the way that I understand it is, you know, you've got these companies that have these data centers and these chips and these models, and you've got these applications that have these chatbots, and you are the company in the middle that helps them access the compute and access the model and sort of package it up in a way that they can actually use it in their chatbots. Is that an accurate way of describing it?
At a high level, yes.
Okay.
So we look at this space of how developers they build and onboard and scale their application in three phases. First is build. They
Right.
need to pick and choose which model to build on top of. And second is customize. That's where they're going to do very intense prompt engineering, context engineering, tuning the model towards specific kind of quality they like. And then last phase is scale, where they need a high-speed interactive product experience and extreme cost efficiency to quickly get their product in the hands of millions of developers or billions of consumers.
And so when you talk about this, you know, I mentioned the chips. I mean, you know, one of the things about your company is you give them access to compute. So does Fireworks rent the chips and rent the compute and then re-rent it out? Is that how it works?
Right. So if we take a big step back, and this AI space is extremely fast moving, the velocity of change is insane in the sense that in the past, we typically think about every 2 to 3 years, there's a new hardware SKU coming out. And right now, even just this year by itself,
Right.
we have deployed 3 different type of skills from NVIDIA by itself. And there are other providers like AMD and other custom ASIC companies are constantly rolling out new skills.
Right.
At the same time, the model architecture keeps changing. Interesting, in past 1 month, it's extremely exciting 1 month where we launched more than 10 new models on our platform by itself. And new models tend to perform really well on the state-of-art hardware. To our customer, it's really fatigue and confusing to them how to pick the model, which hardware to pick, and how to optimize the heck out of it. That's where we want to take that concern completely out of their day-to-day development.
Right.
And they put all this cognitive thinking on how to build the best product, how to create new user experience that has never existed before, and go from there.
So as you help them access that hardware, then is it that you own the chips yourself, or do you rent them from these chip companies?
Right now, we rent them
Okay.
because of the high dynamism of the movement here. And we build on top of many cloud providers. They
Okay.
have, so we have access to a large corpus of the hardware, and we can grow quickly based
Right.
on the demand from the application developers.
So one of the questions I have is I've been so interested in the business model here, where you it's sort of the double rent, right? It's like you rent on the to get access to the supply, and then you rent to the customers that are demanding your products. We've done some reporting at the information that the company is generating more than $200 million in annualized revenue. You're expecting to hit $300 million. I mean, these are big numbers. How are we doing on those goals?
I don't have any specific detail to share in public today.
Okay.
But I would say Fireworks, we have been growing very fast towards the explosive demand
Right.
from various different application segments. I would say especially we see massive adoption of AI agents. Obviously, that is a very fast moving and exciting space. A lot of experimentation that's happening right now. But at the same time, we already seeing great evolution into a movement into production deployment, which drive very high consumption. The interesting part is it's very diverse kind of investment.
Right.
And we see all the way from AI native startups to digital native, even traditional enterprise are actively looking into building AI agents.
Right. Two more questions for you, and I want to make sure we touch on our reporting. One of the other things that we reported is that the company's gross margins are hovering around 50%, which is kind of where a lot of these inference providers are sitting right now. And we've also reported that you're trying to get to 60%. It's still lower than 70%. Can you comment at all on those gross margins for the company, and what you're doing to really improve those margins? Because again, we talked about the business model here, and there's some challenges.
I cannot add more details into those reporting today, but I would say we have built a great business here, and our business focus on value we provide. Again, the value here is during the development lifecycle of AI native product and application.
Right.
It goes all the way from very fast experimentation phase, where application developer they need to try out their idea quickly, validate the hypothesis, and that's where quality is the most important. Allow them to quickly test quality, customize into quality they need, is a big challenge today. And then they need to, once they hit a product market fit, they need to build a viable business. And today that's not the case. The interesting thing is, in the past, when you hit the product market fit, you can comfortably scale your business quickly. Today, it's completely decoupled. If you build a great product that delivers great value to your customer, that absolutely doesn't mean you have a viable business. And many of our customers mentioned to me they are really scared to scale, and they're holding millions of developers or consumers at the gate. Because once they open the gate, they are quickly going to scale into bankruptcy. That's where we add a lot of value, from high quality model customization to extremely fast interactive speed to low cost, and allow our users, the company built on top of us, to shine, but also build a viable business.
Do you? It kind of feels it's a really interesting business model. I mean, I feel like this would make a lot of sense for a larger cloud company to acquire. Have you received any M&A interest from companies?
I think there's no question. The TAM in the space we're operating in is extremely large. I will say it's probably bigger than anything we have seen before. And that's why me and my co-founders, we created this company to power this huge industrial transformation.
Okay.
I think we're on a great path towards that mission, and there's a lot more to build for sure.
And so I want to tie things off here. What is Lynn's vision for the company? I mean, 5 years from now, what do you see Fireworks AI being?
So our vision has been very clear from the beginning. Is we want to give the AI tools in every developer's hand to power them to build next generation never existing user experience, bring that to life, and change our day-to-day interaction to our software. And today it's already happening. There are great companies built on top of us, including Cursor, Notion, all the way to DoorDash, Uber, Samsung, and we are very excited to see the transformation here. But it's just the beginning. We are at the early stage of S curve of a huge change across the whole entire industry, but also in our day-to-day life. My kids already experience AI, and they are the AI native generation that they don't even they think this is very natural tools to be using, and we will see a lot more that's going to happen in our.
I mean, I see it. I see the vision. I think where my head is at is I just think it would make a lot of sense for a bigger cloud company to, integrate something like a Fireworks into their business. So that's why I was asking the question around acquisition, because that's sort of where my head is going, and where do these companies end up? And so that's what I'm curious about.
Yeah, we are absolutely. I think in that sense, we're absolutely aligned with cloud providers because essentially they want to offer their stack, their cloud infrastructure stack, to those newer usage of Gen AI and the newer user experience of applications.
Right.
We're absolutely seeking alliance and partnership with them, to partner with them to build this massive market together.
Well, Lynn, look, I want to thank you for coming on the show and helping us to understand what these inference providers really are. Like I said at the outset, it's a complicated ecosystem, and so thank you for helping us make sense of it, and also helping us make sense of where Fireworks AI is at with your business. I look forward to having you on again. That was Lynn Cao, the CEO of Fireworks AI. Well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for Monday's show. And so until then, have a great weekend. Bye-bye for now.